Good afternoon, everyone. This is Abid Khan, and you are watching Karachians Academy YouTube channel. We were doing in our last class CIE past papers of AS level, right? Paper 9706, paper 2, and version 2. And we were doing May June latest attempt of 2022. So we have finished almost all of the questions. We were on the last question number 4, and its last part E was is last part G. It was to be done. So now today we will be doing the final part. So let's move on to the question 4, its last part. We have done this absorption, and in our last we did this under absorption of, we calculated under absorption of this, right? So additional information at another factory, the company is same, but they are saying they are running another factory. At another factory, the company manufactures 2 products. Okay, this factory uses marginal costing, and in the previous exam question they were using the absorption costing, but in another company they are using the marginal costing. Following details are available. Product X, direct materials per unit for X and Z are given. Direct labor per unit is also given. Fixed cost per unit is given for products X and Y, and selling prices, right? Okay, so a normal production per month is 8,000 for product X and 4,000 for product Z, right? So the company has a major customer who usually orders 5,000 units of product X. Okay, so this they have given us. Okay, important point, we will be, their normal production capacity is 8,000 and 4,000. Okay, and the company has a major customer. There is a major customer who usually orders 5,000 units, okay, of product X. It means from this 8,000, 5,000 is by the special customer, a major customer, and the remaining 3,000 are sold to other customer. Okay, the product as X each month. This order is included in the normal production of 8,000 units, right? So that is why we have deducted this. In May 2022, the customer has asked, this major customer, this specific customer has asked for 9,000 units. Actually they produces 8,000 units, right? And they sell to the other 5,000 to major customer and 3,000 to other customer. But now he is asking to produce 9,000 units. So company can only produce 8,000 units, right? And because 4,000 unit it has to produce for Z. It can only produce 9,000 unit if they stops production of Z and move all its resources to X. All resources to X, then they can produce it. But there will be a loss of, if they go with this, there will be a loss of the product Z production and sales, and it's all production cost, fixed cost will be borne by product X. Okay, so 9,000 units, it is not possible to supply this quantity, very much right. The customer has informed the directors that they will place their entire order with all future orders with another company. Okay, this is a risk and threat to the business, because the customer, this major customer is saying, if they do not accept this 9,000 order and even at the cost of product Z, so otherwise what he will do, so he will place his order, the entire order, he will cancel this 5,000 order and will and all its future orders with another company. So he will switch his business, his sourcing from your company to the other company. This is a big risk and big threat to the company, the survival of a company. So then they have to think about it. The directors are considering two options. Number one, stop manufacture of Z and devote all labor hours to the production of product X. Okay, number one, this is very much clear. What I explained you, either they have to say the directors are in the same of the same view, they have to stop their production, then its fixed cost will go to product X. The company will be able to complete all the orders of product X, and okay, is an option number one A. The directors are considering two options. Okay, stop manufacture of product Z and devote all labors to product X. The company will be able to complete all normal orders of product X and the increased order from customer. Okay, very much fine. So 9,000 of orders from the special one, and normally 3,000 they sell to the other customers. So it means they will be able to produce 12,000 units, right, of product X. Product X, they will be able to solve so much of the units, right. The workforce, okay, this is very much fine, but but actually product X and product Y, these are the separate machines and separate products. So the labor is specialized on certain machine. So the labor which produces Z, they have skills to operate machines of product Z. If we want to divert these resources to product X, they will not be able to very skillfully, they will not be able to run machine X. So the company has to give them training. So requires some retraining, and retraining cost would be, so this will be the cost, another fixed cost, right. So this is another fixed cost, or you may say the relevant cost, fixed or relevant cost. Relevant cost relevant to this decision, relevant cost to this decision, right. So ultimately this will be an additional cost. This is option number one. Option number two, option number B, maintain normal production level. Okay, they are saying 8,000 and 4,000, you produces 8,000 and 9 and 4,000, produce X and Z. So they are saying you produce 4,000, 8,000 as is, refuse the customer's order. Okay, so if you refuses the customer order, 5,000 will be cancelled, and this 5,000 you will have to sell to other customer. So it means you have to tape new customers, right. So you have to tape new customers, refuse the customer's order, reduce, and how you can attract more customers, because this 5,000 additionally you have to these volumes you have to get from the other customers. So you have to increase your customer base. So what they are proposing, the selling price of product X, they reduce price by 5% in order to enable all normal production to be sold. Okay, this is very much fine. So what is required is they have two options. Calculate the profit to be made in May 2022 for each of the options, option 1 and option 2. Okay, in each of the options, this is both options you already have, so we will be working with them. Just 1 minute, let me, okay. Now we understood the whole question. So you have to work out profitability for both the options, right? Okay, so then move on and let's see option A. first of all, what we have to see, this is direct cost, this is direct cost, this is fixed cost. Okay, so if I want to work out my, this is selling price, if I want to work out contribution margin per unit, so contribution margin for 1 unit would be 24 minus direct cost 6, labor 9, right? So this will be 24 minus 6 minus 9, so it will be 9. My contribution margin will be 9 per unit. Okay, and what will be the contribution margin for this? 30 minus 9 minus 9, these two costs will be deducted, and my contribution margin will be 12. Okay, so for product X you have contribution margin 9 per unit, and for product Z you have margin for 12 per unit. Okay, option, if we move on to option number 1, option number 1, what is option number 1? Option, so we have understood, because they are asking to close the production of Z and move all production of 12,000 to produce product X. Okay, so we know how much is contribution margin, contribution margin per unit product X. It is 9. Okay, this is 9. Number of units you will be producing 12,000 into 9. So sorry, number of units 12,000. Total contribution margin 12,000 into 9 equals 108,000. So this is your contribution margin. So you deduct fixed cost from this. And how much is the fixed cost? The total fixed cost is 5 per unit. If we see number of units are 8,000, then this cost is 40,000. And how much this cost is? Number of units are 12, so this cost will be 7,072. Okay, how much per unit is 6, and number of units are 4,000, 24,000, 4,000. Number of units are 4,000, then 24,000. This will be 24,000. Okay, 40,000 and 24,000. So how much will be total cost? The total cost would be 40,000 plus 24,000, and you are incurring one additional cost of 3,000 of their training, right? So how much total would be? 67,000. So this will be your profit. Under this option, your profit, total profit would be 108 minus 67, 41,000. This is option 1, right? Move on to option number 2. We will see what is option number 2. And what is option number 2? In under option number 2, they say carry on the business as is, and do not entertain major customer, exclusive customer who is bringing 9,000 of the order. You just in a normal way you produce, but you have to increase your sales of X. So they are asking you to they are suggesting its prices should be less. So they are reducing prices of product X by 5%, right? So that they can attract more customers, because customer A with a bigger order of 5,000 units, he will not be there. So in option number 2, we can see this is product X and product Y, or I can write bit upstairs, bit up. Option number B, product X and product Y. Okay, so if we see how much is the contribution margin per unit. Per unit contribution margin is for product Z, it was 12. It was 12. For product X, we have to calculate it again because product X prices are being reduced. So product X, if we see, so how much the prices are 24, and they are asking to reduce it by 5%. So the 95% will be product Z contribution will be 22.8 minus, and this 6,009, then you deduct 6,006 and then 9. So its margin would be minus 6 minus 9, 7.8, right? The margin of product X will get reduced because you have to attract more, you are reducing the prices. So how much will be total contribution? Total contribution margin would be, you are selling 8,000 of this unit and you are selling 4,000 of this. So contribution margin will be 7.8 into 8,000. This will be 62,400, right? And how much this will be? 12 per unit multiplied by 4,000. So this will be 48,000 total contribution. You will be earning total contribution 48,000 on product Z, right? Then you have to deduct fixed cost, right? Fixed cost, how much is fixed cost? 40,000. We have worked out it was 40,000. Okay, and it was 24,000. So how much would be the profit? Profit will be 48 minus 24,000. So this is 24,000. 24,000, right? And product on product Z, on product Z, you will be earning 24,000. On product X, 62,400 minus 40,000 its fixed cost. So you will be earning profit of 22,400. So total profit you will earn is 24,000 46,200 under option B. Under option 1, they will be earning 41,000, and under option 2 or option B, they will be earning 46,200. So it is better, ultimately it is better to go with option B. So by this question, our whole complete paper of May-June attempt 2022 is finished now. If you have any doubt or clarification you require, so you can write your comments onto this video, right? And we will try to reply you and will get back to you as quickly as possible, and hope this video will be much helpful to you in your coming exams, I think next week. So, and that was for all, and we will be releasing more videos shortly for other papers. So keep watching Karachians Academy, and do subscribe it and share the link of this channel with the other students, so that they should also get benefit from Karachians Academy, the resource of all papers and a lot of lectures, right? So that's all for now, and thank you very much, and we'll see you in next videos. Thank you very much.